Welcome back. Well, every Monday we like to talk about your financial news, and today we're talking about the bull market.
And we have Brian Midday here. We almost said Brian P. Midday, I'm sorry.
That's all right.
That is your middle name, right?
P as in Paul, yes. That is my middle name.
So it's the anniversary of the bull market. What does that mean?
That means 5 years ago, yesterday, the market wasn't in such good shape. As a matter of fact, the S&P 500 was at 666, believe it or not, the number of the beast, and that was the low of the market pullback. And if it wasn't for Big Ben Bernanke getting up in front of the Senate Banking Committee and basically telling all the politicians in Washington that if they didn't waive the mark-to-market rule in Sarbanes-Oxley, that they would have no banks to regulate in 3 weeks. The banks were going broke, and the reason they were going broke was because CDO obligations, credit demand obligation bonds, were priced at zero. They were valueless, and all the big banks on Wall Street were holding billions of dollars worth of them. So every quarter they were having to mark them down closer to zero. So Ben Bernanke waived the mark-to-market rule. The Dow Jones Industrial Average rallied that day 700 points, and it's come back very nicely ever since. Matter of fact, the market's up 3 times what it was back then. The S&P 500 was at 666. Today it's at 1870 and change. If you had stayed invested from that point forward, you would have more than tripled your money. There was about $9.5 trillion worth of wealth created from just 5 years ago till today.
Wow.
Very interesting. Last time you actually advised to get in when the stocks are down, right?
Right.
That's a smarter strategy?
It's a much smarter strategy. Wall Street's the only place that holds a sale every now and again, and nobody buys. They always, if I had $1 for every time a client of mine or a potential client of mine said, well, you know, I just don't like the market right now, I'm going to wait for it to get better and then I'm going to invest. The whole point is to buy low and sell high. So the market's low when it's not that good. So good money is contrarian money. Invest when people don't want to invest. So the best time to invest is when nobody really wants to invest. When it's really dark and ugly, that's when you want to put your money to work. So yes, if you're sitting in cash right now, to dollar cost average in on pullbacks like today, we were down about 100 points a little earlier today. It wouldn't be a bad time to just nibble into the market and buy a little bit.
At the same time, when we hear the term bull market, that's what investors like to hear.
Bull market means the market's running like the bulls in Pamplona. It means that it's rallying, it's going up. A bear market means that much like a bear that wants to hibernate, the market will want to go down. We've been in a cyclical, it's an argument whether this is a cyclical bull market or it's just really caused by the mess in '08. But a lot of people believe this is the beginning of a 20-year cyclical bull market for equities, which means that there will be some pullbacks, but for the most part, your trend should be up.
So promising news.
I hope so. From your mouth to God's ears.
Yeah. Hopefully so, right? Well, thank you so much for joining us, and we'll see you back here next Monday.
We'll be back next week.
We have Hightower Advisors information for you on our screen. They're located in Palm Desert. You can go to hightowerpalmdesert.com for more information.